Hello, everyone, and welcome to the Trader's Edge here at Exness. My name is Sihle Tuta, and I'm going to be chatting today with my colleague, Terence Hove, who's the senior market analyst over at Exness. Terence, how are you doing? How have you been? And what's good in your side of the world?
No, I've been well, thanks, Sihle. What's good on my side of the world? The markets. I mean, they've been remarkable. Gold is the gift that keeps on giving, and the U.S. Fed's recent 50 basis points cut, interest rates, is even supported, gold to a new all-time high, above 2,650 level. So, yeah, I mean, if you're on the right side of the trade, you'll be smiling like I am,
Amen. Being on the right side of the trade, if
Yeah.
we could do that with precision, wouldn't we all be smiling all the time?
All the time,
Yeah.
all the
Terence,
time.
today I want us to discuss or maybe tackle some of the most frequently asked questions
Right.
in the trading community.
Mhm.
And the first one that comes to mind is around KYC, right? Know your client. So we know when you open a bank account, there's some papers that you need to submit. Well, obviously, because we now live in the digital world, they don't necessarily have to be paper, actual paper. You can send it digitally. But we have something called KYC, which is know your client, which means brokers have a requirement to collect some papers from each client who applies for a trading account, which includes the basic, which is the ID and the proof of address, right? In your opinion, do you come across a lot of traders, or have you spoken to a lot of traders who have issues with KYC? And if so, why is that the case?
Yeah, so thank you for the question, Sihle, and hello again to our viewers and listeners. And yeah, KYC has been a very important part of my career, actually. Even before Exness, all the different roles I've occupied, KYC is a very integral part of financial services. Be it in wealth management when I was in wealth management, be it in investment banking when I was in investment banking, corporate banking when I was there, when I was in treasury. These pillars of financial services, have that common thing of KYC. And KYC means exactly that, know your clients. Before, the term KYC was coined, it used to be called customer due diligence, which is the same thing. You need to know who you are banking. You need to know who you are offering financial services to, because of the nature of what financial services is. It's the flow of money from one entity to the other, from one individual to the other. And you don't want the wrong kind of money to be flowing around the system or between the wrong type of entities or individuals. Essentially, KYC assists you to reasonably be able to identify that information. And for example, we at Exness have been pushing, the source of funds initiative. It has always been there.
In fact, before we come to source of funds,
Okay.
So KYC. So what kind of documents, can I be expected to produce if I sign up for an Exness account?
Okay. So I think the three main types of documents that are required, it's your identity document. Who are we dealing with? The second thing is, where do you live?
Yeah.
We need to know an address. Yeah, we a forwarding address, And thirdly, where is the income coming that you are depositing into the system?
Yeah.
And, more of the source of the income that you place into the system.
And this is a very touchy one.
It is.
The source of funds.
Yes.
Which, a few other companies in the financial services sector has started to do a source of funds. So in your understanding of where you're sitting, what is really source of funds? And if my broker or my bank is asking me for source of funds, what are they exactly asking me to produce?
Yeah.
What documents do they want from me, and what are they trying to establish?
I think the initial, drive behind that, if we look at the next level of it, it's anti-money laundering.
Yeah,
That's essentially what we are trying to curb
to curb
within
anti-money
financial services, globally.
Mm.
And
So it's a global.
it's a global
It's
thing.
not just maybe this company is trying to.
No, yes. And through that global initiative, there's been different policies for different regions or different countries that has come into effect. I remember many years ago, when I was in wealth management, we had FATCA. That came through from the US. That was specific to US citizens, regardless of where they were in the globe, in the world. And it was about that establishing, their financial source of income, so to speak, amongst other things that FATCA looked to identify, which then rolled out into South Africa as well. So on that basis, right, you'll realize that, as you mentioned, it's not an Exness thing alone, but a financial services across the globe.
Yeah.
And we are trying to curb we are promoting anti-money laundering, systems, systems that are able to identify, money laundering activities. And the key point of identification is often at the source of funds, right? And source of funds is exactly that,
Where is the money coming from?
Yeah,
is it from a business? Is it a salary? Is it inheritance?
Or,
Did you win the casino?
That's it. If you want it in the casino, it's as simple as that. You want it in the casino, you confirm the proof that you want it in the casino, and that's it. The issue is solved. If you have a business, let's call it a spaza shop, as we call it here in South Africa, or a tuck shop, as it's called in other parts,
a convenience store,
or convenience store, and so forth. You can produce your receipts or invoices to confirm your goods sold and revenue and so forth. So you can establish what that source of funds. Where it becomes iffy, using that word loosely, iffy, where it becomes a touchy point is when the individuals do not wish to declare,
which was going to be my next question.
Yes.
So what happens if I am not comfortable with sharing some of the documents that you're asking me for, which can sometimes include my bank statement, right? Which can include my payslip, right? Because when you say source of funds, it means I must produce documentation proof, payslip, bank statements, accounting records, which is very personal stuff.
Yeah.
So what if I'm uncomfortable with sharing that kind of information with my broker?
Yeah, I think what is key to understand here is to establish the source of funds.
Yeah.
We are not trying to account for every cent that is coming in and out of your account. That is where I think people tend to get misled, where they feel they need to give an entire history of since when they were born, all the pocket money they've received, and up until now, show us where you've got this X amount. Yeah. Because remember, as you are working, you are saving, you are investing, and that money is growing. Not everyone is consuming every cent they produce. So the $100 that you earn can simply easily be multiplied by 100-fold, for a shrewd investor. And more so if you're a good trader in between your investing activities and your trading activities, that $100 can exponentially grow from 100 to 100,000, for example. The question is, just to say this $100 came from my salary. That's it. And okay, here's the one paycheck. I don't think it needs to be give us the last 356 paychecks that you've received over your career or anything. And I think that's where clients tend to miss the point of us safeguarding them in as much as we are safeguarding the financial institution as well.
Okay, interesting. So we've sort of clarified the bit about KYC, what KYC documents are required, source of funds, what it is. So the next question is the different order types. So when you place a trade, right, there are different order types that are available at your disposal that you can make a use of as a trader. I know we've started from source of funds, now we're taking a different direction altogether.
Yeah.
What are the different order types that are available on a trading platform?
Yeah.
And maybe can you just explain each and what their function is?
For simplicity's sake, let's focus on the pending order.
Okay.
Under the pending order, then there's different buy stop, sell stop, buy limit, sell limit, and so forth. And what simply these then do, they use logic to say, if the price moves a certain way and does this and that and gets to this level, once those parameters are satisfied, the order should be executed at this level. Whether that is a buy order, which means you are expecting the price to go higher, or it's a sell order where you're expecting the price to go lower. The parameters will differ according to how you are viewing the market, but what that simply is, it's a pending order up until the parameters are satisfied.
Okay.
However, in that pending order, the different types of order then have different stages.
Okay.
As I mentioned, you've got your buy limits, your sell limit, your sell stop, your buy stop, and so forth. So what will then happen is the first leg of the order has been satisfied. The second leg of it is yet to be satisfied, but you are already partially in the order. Then for it to be filled, which means the last leg of the order, this last leg needs to be executed. So if you decide otherwise, that you don't want to carry on with this trade anymore, but depending on the type of order that you've entered, it's already partially entered. It's on the way already, so to speak, in layman's terms. So hence you need to let it ride out. If you stop it, it could be either adverse for your trade or usually it's more adverse than it is beneficial, because you have put those parameters that need to be satisfied for the order to be executed, to be filled.
So what can I do? So when I'm planning my order, when I'm planning my trade, what can I do in order to be, let's say, because when you take a trade, you've got a specific profit level in mind.
Yes.
So once that profit level is reached, what happens?
Yeah.
Or if the market goes against me, which I don't want to lose more than what I predetermined, how do I ensure that that happens without me sitting in front of my screen to watch, okay, now it's there, now I must close it. Or, okay, now it's going against me, I've lost 1%, now I must close it. How can I manage my orders, or what type of orders can I employ or use to make sure that my wishes are fulfilled in terms of exit, whether positive or negative, without me sitting and watching the screen?
So I think the first thing is to establish those levels.
Yeah.
What is your take profit level?
Okay.
And then you write it down or you put it in the system. What is your stop loss level? You write it down or you put it in the system. And depending on the order, there's some orders where you say you can continue selling up until this point. For as long as it is within this range, you can continue selling because perhaps the market is going against you and you feel that this is about to turn. So you can continue adding to that position up until a certain limit.
Yeah.
Right? Once it reaches that limit, don't add to this position. The order is filled. Now you are in the trade. Now we want is the take profit. So you establish all of those levels. if I want to buy, you can keep buying as it is going lower, 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 up until a certain level, or even if it keeps going the way you want it to. So it's the levels that you need to establish without, sitting down and watching the computer all the time. And in these levels as well, what is very important to avoid is hope trading. What it means is you want your take profit to be from here to the next town, but your stop loss, it's barely a whisker away from your entry. So that is a recipe for disaster. You're not even giving yourself room to get into the trade, because the market does not move in a linear direction. It's not one way. It goes up and down, down before it goes up. And, all of those, there's orders being filled, being, trades being exited and unwinds, and all of these different forms of liquidity that are coming in and out of the market, that's affecting liquidity, position size, order sizes, and so forth. So if you put a tight stop loss, rest assured you are only, setting yourself up for failure. I mean, in the other episodes, we spoke about profit and loss. I mean, that's a very good example where a trader is trying to profit considerably more than they're willing to
risk.
And the risk reward ratio doesn't work like that. The moment you execute that type of trade, that's a hope trade, because even though you're not watching the screen, you'll be sweating wherever you are, if your stop loss has been hit or not. And more chances than not, it's been hit, just by market moves.
So I can predetermine my exit level once my profit is realized, and I also can predetermine my exit level if I've lost a certain amount, either in cash or pips.
Yes. And one thing that I enjoy, telling our traders and our clients, because those are the ones I engage with the most on a daily basis, is utilizing the Exness web terminal. It does it all for you. Gone are the days where you need to figure out what a sell stop is, what a buy stop is, what a sell limit is, buy limit, and all of this, jargon. And, some traders would say, look, I entered the trade when I thought I was doing this, but it ended up doing that.
Yeah. Okay.
So the Exness web terminal does it for you. The idea that you have, you can actually predetermine what it looks like. And if you're not good with actually doing the math, for example, you are more a visual individual, we even offer the toggle where you can move that take profit line and stop loss line. So you can see what your trade would look like when executed. And you'll be able to establish, is this a good trade or is this a bad trade? And that is one platform that, especially for novice traders, including expert traders, it just makes your trading journey a lot easier. Because I know traders, clients out there, people get lost in the jargon. And financial markets love doing that. They love the jargon. That's part of the culture. And people get lost in that, and they get afraid of that as well. But that system, what it does is it simplifies things as simply as they are, because ultimately what you're doing when you're trading is buying and selling. Buy at the right level, sell at the right level, and make your profit.
Interesting.
Yeah.
So the next question has to do with, what can I trade? Right?
Yes.
Because, from somebody who's new in the business, and you hear people saying, no, I'm trading, I'm a trader. What exactly can you trade if you're a trader? I mean, we know Forex is a popular instrument, right? Maybe let's leave Forex out of the equation. But what else can you trade when you're trading? Or what are you trading? Or what are you buying and what are you selling? Exactly.
Okay. So I'll speak of what we have at Exness. I mean, globally or financial markets-wise, there's a lot of stuff that's out there. So you've mentioned FX, which is abbreviation for foreign currency. And for foreign currency, you are buying and selling currency with the view that one is going to strengthen over the other, one is going to weaken over the other, and you take a position based on that view.
Yeah.
That's really what trading foreign currency is, as simple as that. And then you've got equities, what they call stocks as well. And this is buying and selling of shares in Apple.
So does it mean I take ownership of the share?
Right. So you can, but it depends with which platform you are utilizing. So at this moment, when we speak of trading, we are speaking of speculating. So on the platform that I've mentioned, the Exness web terminal, we offer CFDs, which is a derivative product, which are contract for differences. So CFDs allow you to trade the instrument without actually owning the underlying asset.
Okay.
So they derive their price on the actual movement of the asset. You know, the up and down of the asset is what the CFD is tracking, right? And that's what we offer at the Exness web terminal platform. So you are able to trade in Apple shares on the view that you think it's going to go up or you think it's going to go down without actually owning the Apple share. Now, you'll say to me, Terence, what is the benefit of that? Well, it's a lot cheaper. You know, there are other transaction costs that come with actually buying and selling an actual stock, you know, because you'll actually get a stock certificate, you know, between you placing the order, the commission that the broker will take, the exchange to which that order will go through. There's another broker on the other end who needs to, you know, be able to fill that order, and eventually that trade gets settled. The settlement of that trade, and eventually the issuing of that certificate. You know, these days it's all happening so fast, so simultaneously, but it's still happening in as far as actually owning the actual stock of, call it Apple, right? Whereas CFDs, it's really the price movement, because what you're really after is the pure profit and loss of the trade, other than, you know, the actual ownership is more of an investment. You are buying into the actual company. So these are the considerations one has to take into account, you know, when you are engaging in these financial activities.
Okay,
Yeah.
stocks. So is that it, or are there other asset classes?
Yeah. So there's other asset classes. So there's stocks that I've mentioned, giving the example of Apple. We also have commodities, and we've got different types of commodities. We've got soft commodities. We've got you know, metals. We've got energies, and in soft we are looking at agricultural type of products. You know, your grain, your cocoa, your coffee beans, those are also traded as well. When we look at our metals, you're looking at your platinum, you're looking at your gold, you're looking at your silver. Those are actively traded as well. Copper, we saw, you know, in a year or two ago when the copper flow closed in London, you know, from that crash that they experienced. So copper is a very big metal that's traded globally and a very key indicator of economic activity globally as well. It's used for that. And then you've got your energies. In you know, under commodities, you've got your oil, which is also a very lucrative, you know, instrument to trade under that asset class. You've got your gas as well. And after that, you've got indices. If you don't want to buy a specific stock, you can invest or speculate, trading on indices such as the S&P 500, your NASDAQ 100.
Why is NASDAQ so popular with traders?
It's quite a volatile index, indice, and because of the basket of countries, the companies, that make up the NASDAQ 100. It's maybe a little bit more than 100, but that's where it derived its name from, the NASDAQ 100, and it's tech heavy as well. So it's quite volatile, and it's that volatility that it has that attracts, you know, a lot of speculators and traders to it. Yeah.
Very interesting. So maybe to sort of a different question altogether. So when you open a trading account, there's a set of questions that you have to answer. And one of those questions is, are you or any member of your family a politically exposed person? Why is that question necessary, and what does it mean exactly? What are the implications? Or like, what is the thing with that question? What if I am?
Yeah. What if you are? So that question comes back to a form of KYC as well, because it's also asked under KYC to know your client. And politically exposed individuals have got privilege to information that could move the market or is likely to move the market. So you need to be aware of the level of political exposure, if it is good for that particular business or if it is not so good for that particular business. So if you are politically exposed, the level to which you are politically exposed needs to be established. If you are far down the line that it does not move the needle, then it poses little risk, right? Because at the end of the day, you are able to end up trading certain information that is not yet public knowledge. You know, it becomes a form of insider trading, so to speak. And the risks that comes with, if you are an extremely politically exposed person, you know, the position that you occupy, you've got overview to certain things that you know are going to affect the market a certain way. So those are the things that a financial institution will be trying to establish, which and curb influences or effects that could be adverse to the market.
Interesting.
Yeah.
Interesting. And I think one final one, how do brokers make money? So does it mean when I lose money in a losing trade, does it mean that, is that the money that goes to the broker? I mean, how do brokers make money?
So there's different types of brokers, you know, and I'll speak to us at Exness, for example. We are market makers. So we are giving you the price that is the market. So you are facing Exness in terms of, you know, being a market maker, the same as if you were to call Barclays, for example, and to ask for a price to sell dollars against the euro. Barclays will be a market maker because they're able to give you a price. Right, that's what market making is. They've got the license to give you a price, right? And because of that position that we are at Exness, the liquidity becomes more favorable for our clients. So when you trade, say, for example, through Exness, what you are facing the market. And what happens in between your trade and Exness and the market is matching, where your trade is matched with an opposite trade. And that's what actually happens with all the banks. There's actually a system called matching that runs in the background that matches orders across the different markets. Someone wants to sell at this level, someone wants to buy at this level, and the system actually works to match all those different trades together. So if you lose, you are not losing against Exness, you are losing against, you know, to where you were facing or whom you were facing against in the market, and vice versa. So it's your trade against your position in the market and what it has been matched to. And to that specific point, you do have scrupulous brokers who pry on people losing money, you know, and even if your trade is in the money, they'll make best effort for it to somehow go against you. You know, in the name of that is what is happening. And that's something you also spoke about, you know, for example, at the Smart Vision Summit in terms of fraudsters, because that is a form of it where, you know, you are being taken out of your hard-earned money unjustly. Hence, licensing is very important because outside of that, you know, it's unregulated. Those activities are unregulated. And if that happens to you, you can't actually go to any regulatory body to get recourse against those activities, you know. And I mean, everyone in that kind of space is taking chances, as we call it, you know. So, yeah, so that's what I would say in terms of the different types of brokers that they are.
And I know I said the last question was the last one, but this is the last one. So coming back to Forex, right? How big is the Forex market and who trades or who participates in trading Forex on a global scale?
Wow. The last count I heard of the figure, the Forex market is massive. It's the biggest market globally. It's in the trillions, north of the trillions. I think north of $60 trillion globally. And everyone is engaging in the currency market one way or another. Even if you are in South Africa and you are using your South African rands, that's currency. You might not be exchanging currency, but you are dealing with currency in order for you to get whatever good or services you would like, right? And in terms of who is engaging in it, it's constantly on a daily basis. Any farmer who's selling their South African goods in China is engaging in foreign currency exchange because their goods are priced in South African rand. That South African rand needs to be converted to Chinese yuan for the Chinese buyer to be able to price it in their currency and exchange at fair value, that good for the currency. If you need to buy a particular product in the US, it's going to be quoted in US dollars, and you need to convert your South African rands to US dollars for you to be able to buy that good or service, that you need. So we are all engaging in foreign currency exchange, which is what it is really, in one form or another. If you're buying online, if you're buying on Amazon, you are engaging in it. Then what's specific to that is then the trading, the speculative views that we hold on a daily base, weekly, monthly, yearly base on where we think the currency will go, on factors that are supply and demand, interest rate movements, and all these other various economic factors.
Speaking of the Chinese yuan, right? China is one of the biggest economies in the planet, right? Just like the US.
Yes.
And we know that the US dollar is arguably one of the most or widely traded currencies in the world. Why is the Chinese yuan not feature as one of the top traded currencies? I mean, it's hardly ever traded. I don't even think it's available to trade speculatively. Why is that, seeing that China is such a big economy?
Yes.
And do we know, is the information available publicly on why this is?
I think some of it is, and this also has to do very much with the position that the Chinese central bank, the People's Bank of China, has taken with regards to safeguarding their currency and how they want their currency to be traded. Because ultimately, the mandate is with the central banks as custodians for, the respective countries, the respective sovereigns' currency as well. So they take a position on how they would like their currency to be treated, to be placed, and in the supply and demand of that, which the People's Bank of China closely guards that supply and demand of the Chinese yuan. So I think that really is where it emanates from, keeping it simple.
Makes perfect sense.
Yeah.
I think we have got a lot of questions, but we can't cover all of them.
Yeah.
I think perhaps we can reserve some for our future episodes. But thank you for your time, Terence. Thank you for answering all these frequently asked questions. Until next time, and to our viewers at home, you can engage with us on Twitter, on Instagram, and you can catch the episode on YouTube. Please like, comment, and subscribe so that you can get a notification on future episodes. Thank you for now, and talk to you soon.
Thanks. Goodbye.